Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by Cal State Bakersfield Small Business Development Center. Good afternoon. I'm your host, Kelly Bearden. I'm the director of the CSUB Small Business Development Center, and this is Webinar Wednesday number 381 on June 3rd, 2026. Thank you for joining us today. And we're going to be talking about a really kind of unique funding source. And it's the various communities out there that can help fund a small business. So today we're going to be talking about the SBA Patriot Pitch. It's coming fast. It's a newer program. Um, Not a lot of time to prepare, but we've got the details. Over $1 million it's going to be laid out there for small businesses. We'll give you the details in just a few minutes. It's a community out there, and there are unique ways to fund a small business. And we're going to be talking about that, the unique communities that we find. Our Capital Quarter is all about those community funding options. And how do you define community? I'm going to use a lot of different community definitions today. Some of them are kind of outside of the norm as far as we see for funding goes, funding small businesses, but that's okay. We're going to find a lot of those today. We're also going to be talking a little bit about Economic Corner. And since one of those communities out there is the crowdfunding community of Kickstarter, some interesting economic data on job creation from Kickstarter that was commissioned by a University of Indiana professor and who did the work, an economist. And we're going to share those results with you under our normal feature, which is Economic Corner. Our third regular feature is AI and question mark. And it is going to be just the community resources for AI. And that is just going to be me right now telling you a little bit about our resources that we have through about 8 or 10. I have to say 8 or 10 because some of them graduated, some of them are working through the summer. Some of our student interns that are working on AI projects to assist small businesses. Absolutely free to small business owners. Anything artificial intelligence wise, we have the answer for you at the SBDC. So that's your community resource for AI and question mark for this week. We will have answers to your questions live after the presentation today. Feel free to go in and put those in your particular chat, or you can put them in the Q&A section. We'll circle back through both of those boxes and find what questions might lurk in there today. We also will have the resources in our chat box from our producer, our webinar producer, Maureen Busher-Dang. And so Maureen will be feeding the chat box full of all kinds of good information. And I had a change of heart. I decided to go with a poll for today. So no poll today. I got a couple of questions for you, just a couple of easy ones to try to find out a little bit where we're going and a couple of the things that we're seeing out there. So let's go to poll question number 1. And our first poll question today is going to be on a little bit about you and your business for both of these. And the first one is going to be basically what would be your ideal funding request? So this is going to be your want. I like to break things down into how much do you want and how much do you need. So it could be 25 or 1,000 or less. We'll go 25 to 150,000, 150 to 500, or over 500,000. So getting a lot of those that are jumping into the larger size today. This is why I asked this question. Sometimes you surprise me out there. And we do already have a whopping 66% of you participating, looking for one more participation to kick us a little bit higher. And once we give you one last shot to jump into the poll question, we're going to go ahead and end the poll and share the first poll question results. What is your ideal funding request? Half of you are saying $500,000 or more. That is a substantial amount of money, so that is really good to know. So a lot of big projects on Webinar Wednesday today. A quarter of you are between 150 and 500, and then 225 to 150 is the other quarter. So literally three-quarters of you, 150,000 and up today. We'll take note of that. Okay, poll question number 2 is basically going to be, let's see, I think it's this one right here. It's what are your biggest obstacles to obtaining capital? So we're going to be talking about uh, commercial capital today. Is it in community capital? Is it not enough resources? Maybe enough revenue, income, qualifications on loans? Does it need guidance on a lot of the planning that goes into it, a lot of the paperwork, or you're not sure to find the best funding option for you? So, your biggest obstacle to obtaining capital, is it not enough income or resources or revenue, excuse me? Is it the loan qualifications, potentially some of the loan qualifications issues that come up? Is it you need guidance on paperwork, loan planning, etc., and not sure where to find the best funding available? Okay, we do have one last moment for you to jump in to poll question number 2, the final poll question for today, providing all kinds of non-artificial intelligence for me to work with the rest of this webinar today. So we'll jump in and in the particular poll with over 80% of you participating. We'll go ahead and share those results, and 40% of you are not sure where to find funding, what's the best particular option. So, well, that's great because there's a lot of different various communities we're going to talk about, and there's a lot of resources we know of at the SBDC. And oftentimes it does come down to the amount of money that you are asking for. Depends on the best funding resource that's available for you. 30% of you are not showing enough revenue in your business or enough income to be widely considered by a lender. 20% of you, it could be the loan qualification issues, and some of those could be maybe your lender is requiring some collateral. Maybe it's a credit history issue. Maybe it's the condition of your particular business, whatever it is. Loan qualifications, 20% of you, and 10% of you would like additional guidance on the loan packaging process. So that's going to be the loan paperwork, the budgets, the business planning, cash flow analysis, etc. So thank you so much for sharing that with us today. And let's move on. So, as one of our regular routines, about every Wednesday, we have Capital Quarter. And obviously, today it's a big topic today. So, we'll jump all over it. But those of you that haven't seen my big, beautiful bill, my big, beautiful bill is the $100,000 bill, Series 1934, a bill that I think is valued at somewhere around $2.5 million. What a gorgeous thing that is. But that is our Capital Quarter showpiece each week. And we're going to be talking first about an SBA program called the SBA Patriot Pitch Competition. Now, for those of you that were looking for $500,000 or more, wow, look at this. The first prize is $400,000. That is fantastic. $1 million overall. It's open to all industries are eligible to apply. Finalists will compete in a live pitch event in DC. To be eligible, businesses must have at least 3 years of operating history. You must generate a minimum of $100,000 in annual revenue. You have in the past at one point or another needed to utilize one of SBA's capital products. So with SBA capital products, those are the loan programs. So that would be a loan program such as the Guaranteed Loan Program, or also referred to as the SBA 7A program. It could be the SBA 504 program, which is their fixed asset program, generally used with the purchase of land or buildings, but also we see enough cases of where major purchases of equipment count. There are also Community Express programs that go from about 350 down to about 100,000, to where SBA micro programs are under 100,000. So those are the 4 main SBA programs. There's some newer ones. There's the Mark that is working with manufacturing businesses. But in order to qualify for the SBA Patriot Pitch Competition, you must have accessed one of those programs in the past. And then also, you must be okay on the federal debt provisions that the government has as far as repaying federal debt, including student loans. 100% ownership by U.S. citizens or lawful permanent residents. And really, I think what is going to really define the winners in this particular contest is they're going to be looking for demonstrated innovation in your particular industry or business sector using new technologies or strategies. I like strategies in there as well as technologies. And in order to modernize your operations and strengthen your competitive edge. So again, that's going to be a prize pool of $1 million with a grand prize of 400,000. Some more of the details on this particular program is our 10 semifinalists will be announced. And they'll be announced this summer at the Great American State Fair. I think I'll probably miss that one. But they will have 5 advancing to the final competition. I'm assuming all 5 will win cash prizes, with the top being 400,000. You must be available in that time range in September. The other thing is that this application process, and I know Maureen is putting the below link that offers a lot more information, but it is only 8 days away. So it was a very tight timeline in order to qualify. So if you've got a little bit of time on your hand and you want to jump into this particular program, there it is, and there is an opportunity there for you. So again, the SBA Patriot Pitch Competition coming up soon. So one thing that we showed you the whole map of our Central California SBDC region. Here is just the 2 centers for the CSU Bakersfield Center and the Valley Community SBDC that covers basically Bakersfield, Fresno, the Southern Sierra, and the Eastern Sierra region. So of those 14 counties, here's 7 of them. And what we've done over the last few years between the 2 of us is we have actually worked with the Federal Reserve Bank. Many of you have filled out surveys, hopefully. And the credit survey is an annual tool that the Federal Reserve uses to gauge how small businesses are accessing, how they're functioning, and how they're working in this funding environment. So really an important piece of work that we get from them each year that we have got over the last 4 years now, 3-4 years. And this year, in order for us to get our own partner report, we have to have 75 surveys that are submitted from our particular region. So this year we were able to get to that 75 by combining the CSUB Small Business Development Center and the Valley Community SBDC. So that is the data, and we're coming up with some different data that is already being analyzed and really going to produce some interesting things. So whereas we might have had our 3 counties of Kern, Inyo, and Mono, Valley Community, their 4 counties, this is a combined report. And again, this is just the 7 counties in the Southern Sierra going up to the Central Sierra and also the San Joaquin Valley. So the first report that we had from them was the age of the firm. So I'm trying to think what are community-based survey questions out of the ones that we get access to that are going to be used for today's presentation. So the first one was age of the firm. And what we see in our community, we're slightly higher in younger firms, something that's been showing up in other surveys and other reports. So 40% of our businesses that surveyed were between 0 and 5 years in business. The interesting thing is if you jump to those that have been in business the longest amount of times, the next group, 30%, is those that have been in business 21 years or longer, which is also more significant than the national trend. So you see our kind of purplish gray in the lighter shade of gray being national, us being the 7-county region that we have. So it's kind of unique to where the middle range, the 6 to 20 years, is so substantially less than those that have just started over 5 years and those that have been in business 21 plus years. So interesting, I thought, from that perspective, and the fact that we had greater number of substantial or ongoing long-term businesses. As far as the industry goes, broken down in goods and retail and finance, substantially less. You'll see that throughout our region that we have more service businesses. And our service businesses are higher significantly than the national average there, with two-thirds of the businesses that reported being from actual service type industries. The age of the primary user, what we see is we're substantially higher with older, much older, in this case, 65 and under or over, much more aged, much more senior level entrepreneurs. So really a little shocking, a little surprising there. We're going to compare that to our previous 3 or 4 years to see what trends have been happening to bring on older entrepreneurs, which is not only a trend here in our particular region, but is something of a phenomenon that's been going around. So 31%, 65 and over is the age of the firm's primary owner. Those in the middle are less like before, and then higher at the beginning. So again, kind of what we were seeing earlier. And gender of firms. So the community of gender, the percentage of firms that are women owned are almost twice as high as those national average. So we have a lot of women owned firms. They are very engaged, they are active, they are completing surveys too, and they are showing up and being represented. So we see a number of that to where it almost equals men-owned firms in our particular region, whereas there is a significant difference on the national average. So interesting. And our last is the minority firms and the non-minority firms as they're described by this particular partner report. So in this, we show that the minority-owned firms for our region over 50% compared to nationally only being about a quarter. So substantially higher involvement and engagement in minority-owned firms in our particular region than on the national average. So there's a little basis for some of the process that's going into here. On our regular feature also, we talked a little bit about this on the opening, but there's our economic corner. Our economic corner really kind of jumped onto this Kickstarter jobs and really kind of was really surprised by the amount of jobs that were created by the Kickstarter platform. So we'll look at this in just a moment, but as many of you know, Kickstarter is a crowdfunding platform. It is pretty much, a project-based platform. It can be used for businesses. It can be used for those that produce goods and services. I think the greatest opportunity still is out there for service type businesses. And it really kind of focuses a lot on what you do. We'll show you an example of a campaign in just a minute, but Kickstarter's economic impacts were far beyond the founders themselves. And what it showed was during the campaign annually, and Kickstarter's been around for about 17 years, I believe, is that they create nationally about 15,000 full-time jobs and about 21,000 temporary jobs. This is why these campaigns are going on. And then after the campaigns, you see the additional jobs that have been created. So during that time, they have estimated that they have created over 1 million jobs using this crowdfunding platform. Kind of blew me away. I figured there were a lot, but really to take the time and effort to study it and to come up with a quantitative number or estimate of what I would consider this to be of over 1 million jobs that have been created through the campaigns and the businesses that were started after that. So the support was just not at launch, but during the full life cycle of that interesting aspect. And another way to understand their economic footprint is to look at to where kind of the earnings originate from those who created these Kickstarter campaigns. And 58% of those are attributable to campaign pledges, and 40% of those funds to post-campaign impact. So really, so much more is coming after these businesses are given a start or a major effect of what's going on in their particular ecosystem. So let's look a little bit about that. Let's look a little bit about our first community. And we're going to reference the Yosemite Climbing Museum. It's a campaign that we've shown on Kickstarter. It's one that we've widely supported at the SBDC. It has been ran by the Yosemite Climbing Association, and our lead advisor, one of our two lead advisors on the Eastern Sierra, is Jim Thompson, and he has kind of cultivated this campaign. And what we'll do is let me stop my share and let me jump into particular uh, platform and kind of look and see what has been going on there. And so here's the particular campaign. And what has been going on with this particular campaign was the Yosemite Climbing Museum wanted to do a film festival and storytelling summit in Yosemite. They're doing it later this month. They wanted to raise $15,000 to do this, to start this. And they were able to, through the assistance of 175 backers, they pledged $21,509 to bring it to life. And so they did it through a variety of different resources and through different rewards programs. You'll see the rewards that I'm scrolling on the right, a lot of different ones ranging from just being a supporter to being a friend to getting VIP film passes. And so you see the more expensive ones. But also, look, they just asked for a pure donation, being a nonprofit. And a good lesson to all you nonprofits out there is just to ask. And they were able to obtain $501 from 7 different backers who just wanted to make a 501c3 nonprofit donation to that organization. So it's a film festival based on climbing. It's been a really rewarding project. Those of you that have heard us talk about it from the inception to where it actually went out on Kickstarter about 6 weeks ago, we've talked about how we really want to see more for-profit businesses use this platform. And to do that, we had multiple interns from the SBDC that interned and worked inside this particular project using AI tools and other methods in order to create the greatest opportunity for success. We had a really good feeling that this was going to be successful going in because of some of the things that we have learned over Kickstarter in the past. So now what we're looking to do is we're looking to parlay this. The thing that's interesting, and you got to always remember about Kickstarter, their goal was $15,000. If they didn't reach that goal, that $21,508 wouldn't have been earned. So if they would have got to 14,000, they would have received zero. So interesting point, and really kind of fascinating from the standpoint of looking at it from how a nonprofit in this situation, but it could be a product service business. It can be a service business that is selling services and doing pre-sales. A lot of opportunity to where you can organize if you have a crowd and who really wants to be part of your success. That's what we're really looking at here. And that's what they're trying to build. And that is what is going on there. So we're excited for the Yosemite Climbing Association and also their Kickstarter campaign. Great work to Jim and to Katie and other organizational members of the Yosemite Climbing Association. And a big thanks to our student, Christopher Carlson, who worked on this particular project and did a fantastic job of not only learning how to make your campaign when you come to him now or come to the SBDC successful, but how to make this one successful. So excited about that and glad to share and glad to show you where we ended up with that particular aspect. So going back to where we were on our particular PowerPoint here. So getting back to the customer communities and talking about our first community of 9 that we're going to share, and it's going to be about customers. And so we just went over what the Yosemite Climbing Museum campaign did, and it really showed that people, didn't contribute because they wanted a financial return. They wanted to be part of something. They contributed because they cared about climbing history, about preservation, about Yosemite, about outdoor recreation. about preserving some history that was going on in that organization. So with that comes a lot of opportunities that come through, particularly crowdfunding. So you see why it worked for the Yosemite Climbing Museum, but the community funded this project, and a lot of communities fund projects that have membership drives, for example. And a membership drive can be a service business that signs somebody up as a member and actually provides them a service over time and for a prepaid opportunity for them to pretty much launch their business. We can get into pre-sales of products or services. And then looking at four of the platforms that are widely used in the crowdfunding range. You see Kickstarter, Indiegogo, GoFundMe, and Patreon. Our second community that we want to talk about, and some of these are on the smaller side of things. We'll have some of these bigger communities available in a little bit, are basically local government communities. So, and on local governments, we will come up with one that isn't on the list. So on local governments, we find also that oftentimes localities often invest in themselves. For example, Kern County's program on Kern Biz, which provided direct support to businesses making improvements in their commercial buildings. So it was a facade grant that working on their facade, their outside, making their business more appealing in the rural areas of Kern County. So we saw that particular aspect. We've also seen the city of Bakersfield with their grant program, which is still in operation. Micro grants, very small, 2,500 to 5,000, but making a difference for those small businesses that are looking to do something more. Now, whereas we don't see a lot with downtown revitalization districts, those are kind of something, but really what kind of bore out of those were these opportunity zones. And we've been listening to the County of Kern and others talk about Opportunity Zone Part 2. So 2.0 is coming for opportunity zones, and we're seeing a lot of that change. And that is really an opportunity for a lot of bigger investment to come. And local economic development grants. One of the more unique ones that I would say that is available for larger businesses is a unique program. It's going to be through the state of California, and it's going to be through their CDBG program, which is their Community Development Block Grant Program. They have a very underutilized program that has funding at times and oftentimes doesn't. But when it has funding, they have a program called the Over the Counter, where small businesses, if they're creating or retaining jobs for low to moderate income to individuals, again, this is calling out to those of you that wanted $500,000 or more. I've seen these grants go up to about $3 million. Again, they're called CDBG over the counter, and they are loans. They need to be made to a locality. So we could maybe engage somebody if you're in the rural county by having the County of Kern engage in that. And then repayment can come through those particular entities themselves and provide future benefits down the road. One thing about these grants, they do not happen quickly. So if you're looking for something, and again, it does get down to the key trigger on that is going to be providing employment for low to moderate income individuals. And that is community development block grants, CDBG, housing and economic grants, federal money that comes through the federal government. So that's one of the things that's there for bigger aspects. You know, some of the educational communities, when you come to the CESUB SBDC, we have a lot of larger programs. Did I prepare for a lot of them today? No, because you guys threw me a curve. This is why I ask. So, but we do have a lot of programs that are out there that work with a varied amount of lenders. And a lot of them are higher loan amounts and higher in equity investments. SBIR projects. It just depends on your specific individual project. So the CSUB SBDC is there. Very small stuff again, the 2,500 to 5,000 through the BC Launchpad. Also the CSU CEI, which CEI is an acronym for the Center for Entrepreneurship and Innovation, they do an accelerator 3 times a year to where you work on accelerating your particular business. Either it's the business you already have. There's a pitch prize finale, which offers a smallest pitch prize, but it also brings in those that are interested potentially in investing and brings a wide range of ideas in order to how to invest in, say, forms of venture capital, forms of angel financing, other ways of where you are actually giving up ownership of your particular business in order to be provided that capital. So those are a few of the things that are available through educational communities. One of my favorites is inside industry communities, because what we find is innovation and key activities and those that are looking for money inside, say, certain industries find the funding there themselves. So these strategic partnerships actually fund within industries. And one of the bigger ones is going to be focused on what are our economic drivers in the community. And obviously, two of the biggest ones are going to be energy and Kern County. It's not only oil, but it's also renewables in eastern Kern County. So it's going to be that and agriculture. And we've seen projects where individuals came in with some innovative ideas for agriculture. One of them was quite small, one of them was quite large. And they were able to find funding within the agricultural community. And that is real important because there is money out there for innovation and for ways to make money and for ways, and it's really kind of a way if you have a difficult time, these strategic partnerships work really well in order to kick your business going and bring yourself in with a solid, reliable partner. So I've seen it happening on multiple occasions in the agricultural segment. It can also happen in manufacturing. It could happen also with tourism and also not only tourism organizations, but a lot of the things going on with key drivers in your economy. For example, when we go over to Inyo and Mono counties, the other two counties that we serve, tourism is the #1 driven activity. So partnerships that you have or you might have that are tourism or dependent on tourism really kind of see an interest in those that are already in that particular industry. So going back to the industry and within the industry community themselves. #5, community development financial communities. And for this, I'm going to just kind of use the community development financial institutions, which are CDFIs. And CDFIs typically are generally going to loan under that 500,000 and less. Depending on the lender, we have some that will max out at 50,000, some max out at 350,000. So there's a lot of different lenders and they have a lot of different requirements. So it's kind of working with the client at the SBDC. We work with you in trying to find what lender is best. So the community development financial institutions, they fund a variety of projects. And as being nonprofits, oftentimes they're a lot easier to fund than other types of particularly driven organizations. So community development financial institutions, CDFIs, we have two of them that are located in Kern County, the Valley Strong Credit Union, Alta One Credit Union. Those are two that are based in Kern, but also there are a number of them that serve Kern County, have offices such as Access Plus Capital and others. So those are pretty much the key drivers of the community of community development finance. However, though, there are asset and mission-driven drivers. So there are those that will drive based on a particular mission. It could be something along the lines of something technology-wise. Oftentimes it is. We also tend to look at things such as small business innovation research grants, STTR, tech transfer in small business. So a lot of things that are available on that particular organizations. Some other organizations such as Cameo and others are out there, but again, those are going to be smaller type organizations. You know, this is a natural tie I thought of them initially when I saw and heard of the Patriot pitch competition. Obviously, veteran communities would focus well in this particular area. So veteran communities in this area, we're going to really kind of look at veteran-focused lenders. There's one out of the Bay Area called Veteran Launch. There are others out there that really kind of work within some of the other existing funding networks in order to assist veterans. In Kern County, we're blessed with some great veteran-based organizations, some really strong veteran firms and veteran work that is being done. And so oftentimes these will spill over into veteran entrepreneur networks. Um, and also, one thing that oftentimes a lot of people don't really reflect or really get into is going to be a lot of the work out there that is going on in particularly government contracting work. So, yeah, government contracting is kind of a big deal potentially. It's not a funding resource, but what it can be is it can be a good revenue stream and really provide you some great work for your particular veteran-owned business. But the veteran communities that are out there and some of the veteran opportunities that you get with contracting, not only on a federal level, with federal certifications that are out there for, veteran-owned businesses, for disabled veteran businesses, et cetera. But oftentimes, a lot of things can really work in your direction positively by finding government contracting programs. And also, whereas I can't really list one off the top of my head, I do have heard from some of my colleagues that there are military affiliated angel investors. So these are, again, going back to the last slide, a mission-based investor. And what they really want to do is they really want to work with active military, spouses of active military, and veterans in trying to provide startup investment capital to these individuals in order to help them on their way to success. Okay, so the first six I think we've talked to, most of them have been on for-profit businesses. We do see kind of some activity in the nonprofit sense. So philanthropical communities is something that would be our seventh community. And in Kern County, we're fortunate, and I think a lot of counties have this, larger counties particularly, is we have the Kern Community Foundation. And they will work with nonprofits. They could provide usually maybe a small stipend, but really that setup and really housing their particular nonprofit is something that they do extraordinarily well. And they like to invest in economic development. They like to invest in community resources and community programs that are going to have effects for everybody in the community. Yeah, worked the word community in enough times that time, didn't I? So while they usually fund nonprofits, their support for entrepreneurial ecosystems gets into workforce initiatives, into potentially rural development and community revitalization projects. They could also potentially be a resource for potentially those that give to their particular type of business venture. At the SBDC, for the nonprofit segment, we don't have the tools or the resources at this time to dig in super deep into who is doing what in the philanthropic community. So, knowing that and knowing some of their giving tendencies, their giving plans, and really where they want to give are some great things. So really keep in mind if you're a nonprofit, if you're thinking nonprofit, that is out there. Okay, so this goes a little bit beyond what we were doing with our Yosemite Climbing Museum, but I thought it was a great example about how fanatics can really kind of drive your community and how you can have a community of local fans. And so with a lot of the, I think this is possible because a lot of the, of the online resources that are available, particularly those that rate particular businesses, that talk about, what they like about particular businesses, and a lot of those communities But really what my question is to you is who are your fans? Who are the fans of your business, but also who benefits with your success? I think that that's really something a lot of small businesses don't really think about is in addition to they might benefit with their success, what other organizations and what other community partners might benefit as well. So my favorite is, and it comes out of some potentially out of crowdfunding and some of the other things, but you see some zealot online brand warriors. You see people that really will endorse your particular brand. They'll endorse your particular concept, and they will run with it. So really finding those zealot customers, finding those zealot individuals who are online and who are making a difference potentially for your particular business. And those are obviously, many of those are going to be customers. Potentially, they could be donors, maybe more on a nonprofit or crowdfunding backers, but they could also be referring partners and advocates. But really kind of looking at the community of who your fans are, and is there a funding opportunity with those particular fans? Sometimes we get into a community also is one, I mean, you maybe see this more in the local or the rural communities, is small businesses play such a vital factor. I remember in Inyo County during the pandemic has one movie theater. They have one movie theater, a double screen in Bishop, California. Beautiful place. But really, what kind of entertainment and what kind of value does that business bring to that community? And really, oftentimes, if you were to lose not that particular business, but a particular business like that, a real retail business, a food or beverage or hospitality type business, that really kind of can affect the quality of your life. And we see that a lot of times with local fans in actually selling businesses and those individuals that are looking to buy businesses. So really, I can't say enough about understanding and knowing who your fans are in your particular business and who benefits from your success. Here's our ninth community, and it's really something that is rarely discussed, but I think it can be a significant resource at times, and that is faith-based or faith communities. So, congregations can have either formalized or informalized microloan funds. There could be church business networks. There could be employment or job services that are located for members, faith-based economic development programs or missions. There could be a community investment club. But, there's a lot of very strong faith-based communities that will do a lot for their particular members. And one of those is be a fan. Go back to number 8, be a fan for that community. And so looking at faith communities, I just wouldn't discount it in those localities where I think the opportunity might exist. And those are the 9 that I have. So what are your next steps? That's the next thing, is what are your next steps? I always like it when people, and your next steps are all going to be individual, so I'm going to leave this page blank. You fill in this blank. What are your next steps to using communities or using resources that you have learned on this webinar in order to find and fund that particular small business of yours? So think about your next steps. And I'm going to just share with you some of the tools that we have at the SBDC to help your business succeed. Right now, we're up here in the right-hand corner with Webinar Wednesday, but we have a lot of different aspects and a lot of different programs that can really help you. Here's a lot of them. We did share some findings from the Federal Reserve's Small Business Credit Survey today. We have a wonderful Vertical IQ, which is an industry-based database that compares your business to the industry that you thrive in or you want to thrive in it. By understanding your thresholds, your benchmarks with Vertical IQ, you could know if you're thriving or if you're underperforming to your particular industry. Some of the other things that are available, obviously, I could go on right then and there, is we have our Capital Summit. Our Eastern Sierra Capital Summit is returning to the Eastern Sierra in Mammoth Lakes, July 16th. Hey, I'll be there. Mentioned a little bit on vertical IQ. I would really, if you hadn't signed up for SBDC services, the first thing I would do is sign up and I would ask that your advisor actually bring you a vertical IQ printout that actually compares based on your standard industry classification code or your NACE code, your North America Industry Classification Code, which will define your particular industry and financial results and other key tips, what's going on in your industry. We also have the AI resources at the SBDC. There's 24 states. I think that's up to probably over 40 now that are participating. You are here on you can be at our CSUB SBDC. If you want to view this particular webinar, go to our YouTube page, CSUB SBDC. Over 330 videos on the site now. Maureen usually has it up a couple of days after the webinar. I think we're up around 550 subscribers at this particular point. And please do contact us for confidential, no cost, no obligation expert consulting. You can sign up at our website at csubsbdc.com. Big thanks again to our partners and our people, our organizations that allow us to be here. My contact information, and I'm going to stop the particular share now. I know that was a little quick on sharing my contact information. But I'm going to jump in and see what questions we might have. And going right into the questions and Q&A, does SBA provide debt consolidation, long-term financing to provide small business relief from LOC high interest rates? And the answer to that is yes. The line of credit, which I believe LOC stood for there. Let's go take this in many different aspects, though. The SBA does provide debt consolidation. One thing that is getting harder to do is to refinance MCAs, which are merchant account transfers, and also some of the fintech companies that charge really super high rates. And usually you prepay the interest on those anyway, so there's little other than getting a break from the cash flow from the daily grind of a payment. But oftentimes those are getting harder and harder too. So it's almost on an individual basis if you're going to drag those types of debt security. But really on the overlying theme on SBA debt consolidation is going to be, basically the qualification that comes in, but really how much cash flow are you going to be saving? And how can you demonstrate through a cash flow forecast, for example, on how that's going to benefit the business? So, yes, that is particularly a possibility. Okay, so some questions on the Patriot pitch competition. What are the judges looking for? Are they looking for financial projections? What are the biggest red flags for the pitch? I think it's going to go back to where you can demonstrate some type of innovative product, service, or strategy. And I haven't gone through the entire application form just yet, so I don't know how detailed it is going to be. I would imagine that it is going to, for a $400,000 first prize, it is going to be a little bit out there. Okay. If the business is not selected from the Patriot pitch, does the SBA provide feedback or resources to help improve to compete again? The first time that this is being done, I hope that that's going to happen. But we'll learn more as this goes through. It's interesting too that the $1 million prize isn't coming from SBA or taxpayers. It's coming from an industry or an organization, I believe, called Clover Inc. So more on that. Only 8 days to get ready for it. So hopefully we can get something going there soon. Okay, let's jump into the chat and look and see what's going on with chat. We have information here. Greetings and salutations. Good to see Our good friend Rich is available on today. There's information more on the YCA Kickstarter that we did. We're jumping into some of the other resources that are available. See plenty of resources that we talked about, our YouTube channel, others. If you have an AI project, feel free to email me. There's my contact information. And whereas I was a little short on the contact information, jumping off of that, it is available there. But that is a view through our chat and our Q&A. So, last chance to get a question in. Other than that, well, oh, here's the question. Okay. Okay, number one, I'm a small business that's growing rapidly. I've spent most of my capital trying to keep climbing. Example, hiring new employees, increase work, etc., the expenses and all that. Um, I have some good clients on large contracts, but getting paid timely is a major burden. Well, where could you go? One thing is, and we've talked about this resource in the past, reach out, send me an email, kbearden@csub.edu, and we can talk about one of the, I think, really good resources, and that is if you have sufficient, if you have sufficient margins, I recommend that people actually will use, as I put in my email again in the chat, I think they will use accounts receivable financing. And the reason is it's a little bit pricey, but it's an individual decision, one based on another. And if you've got good enough margins in there, you could afford to pay for it. And what it does is it frees up your capital, and it frees you up to, once you start doing it a little bit, work on that, and then work toward a credit line with a bank, because that's ideally the goal. And maybe that's the first step to look at, is a credit line through the bank, not knowing how much you need. We didn't talk about it because we were looking at some of the bigger projects and programs out there. But there are some credit cards that work as credit lines that'll go up to about $25,000 at favorable interest rates. We're talking 10 to 12%, which these days are pretty favorable. So there are kind of some unique things out there and some unique programs, a lot of different ways. It just really depends on a lot of your own particular business. Having good clients and large contracts, but if you're not getting paid timely, I would really look at accounts receivable financing. We have a couple of people that are really good in that particular space. You have to really watch it. You do not want to become addicted to accounts receivable financing. It is a project by project basis, but it can really work toward growing your particular business if you do it right. So that's one thing that I would suggest. Um, let's see. Last chance for a question. Okay. Well, that's going to wrap us up for Webinar Wednesday number 381. Look at your communities, look at the community out there, and look at all the resources that are available. Come to the SBDC and we'll help you find something that works for you. So, for our producer, Maureen Busher-Day, I'm Kelly Bearden. Everybody have a fantastic day. We'll see you next week for Webinar Wednesday 382. Goodbye, everybody.